Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about return on investment. So return on investment is a word that is commonly used by investors and traders and maybe many people who are in the business sector. So what is a return on investment and how you calculate it is what we are going to look at today. If you're new to this channel, please subscribe for more videos and we appreciate your support. Now let's get into it. Like, what is ROI? So how do you calculate these things and how important it is for you to know the ROI? So this is how it shows how well or how bad your investment has performed. So it could be negative or positive, but it's mostly presented in percentage. So it's expressed as percentage. So most of the time we're looking for the positive investment return, but sometimes it could be loss. Okay, so how do you now calculate it? So ROI is equal to profit or loss divided by the initial cost of investment. So the money that you put in from the beginning, and time is 100. So that's how you calculate it. So at this point now, you're already familiar with how this thing is going to go. So it's very simple calculation and it's very important for people who like to invest and trade. So you always know that you are not only making profit, but maybe sometimes you're making loss. So it's really, really very important. So let's see. So there are so many components there of return on investment. So one component is the profit. So you have to trace whether you're making a profit or loss. And then you also have to keep track of the money that you put in from the beginning. So the initial cost of your investment. So sometimes you do this on different accounts. So there are cash account and there's also marginal account. There are people who also use CDF. So different accounts, it works differently. With the cash account, you are using your own cash to buy shares, and now you will calculate your rate of return. So today we are only focused on cash account. So what happens if you use your cash to invest and then see how well your investment perform. So let's look at this example. This example shows that you buy 100 shares of Tesla in cash, and one Tesla share was costing you 200 per share, and sale proceeds is at 220. So this is what we now target as a target price. So you can set it up in the stock market saying that when this Tesla goes to 220, sell 100 shares of my Tesla, and then you will make your profit and you move on. So now let's calculate the initial cost that you put in. So the cost of investment will be 200 times 100 shares. So you get 20,000. So you put in 20,000 to Tesla, and now you are targeting a price of 220 per share. So how is that going to work and how much profit are you going to make? So let's continue with our calculation and see what happened. So we are continue calculating the rate on investment, return on investment. So now let's calculate the sale proceeds. So we already determined how much money we put in, which is 20,000. Now let's see if we actually get to 220, how much profit are we going to make? So let's see how we are bringing our account to that profit level. So sale proceed would be equal to the 220 times 100, right? $220 times 100. So you are selling your shares of 100 by 220 per share. So now you're making almost 22,000. So you already figure out that we have already made a profit. So once we make the profit now, we need to know what percentage did our investment increase, and that's why we now talk about return on investment. Is just that percentage to know whether our investment increased by 10% or did it reduce by 10%. So we now going to calculate the return on investment. So the proceeds is 22,000. The cost of initial investment was 20,000. So let's go and do the return on investment. So how do you get it? So like previously, we show you how to calculate the formula. So the formula is the profit divided by the cost of initial investment times 100. So let's see now how we go get that. So the profit, let's determine the profit. So the profit will be the amount of money that you get from your sale proceed minus the cost of initial investment, and that will give you the profit, right? So it's 22,000 minus 20,000. So you get 2,000. 2,000. Imagine, that's a lot of money. So you get the 2,000 as your profit. So you already get another part of the formula. So it's profit, and we also have the cost of investment. So now let's finish by calculating the return on investment. So how does it look? The return on investment would be the profit divided by cost of initial investment. So how much money did you put in? How much money did you get by selling them at the profit? And then you get your profit and then divide by the cost of investment. Return on investment is calculated by taking the profit divided by the cost of initial investment times 100. So I have repeated it so many times, and that is how simple it gets. So you just take the profit and then divide by the cost of investment times 100. So you would get 10% for us the ROI. So sometimes it can be expressed in decimal too, which means it will be 0.1. So your cost of the return on investment is 10%. So that's how it is, and it's very simple to calculate. You just need to determine the components of your formula, like the profit, the cost of investment, and then times 100. So if you enjoyed this video, please subscribe for more video, and I will appreciate your support, and thank you for watching.